Good morning, good afternoon, good evening, folks. How are you doing today? Michael Zuber, One Rental at a Time. And we are with one of my favorite folks, the legendary investor, Jonathan Twomley. How you doing, sir?
Thank you. I think you're overselling me a little bit, but
Well, you're a legend to me.
I'm a legend in my own mind too.
There you go. It's what your wife told me. She told me.
Actually, no, my wife would not tell you that. My wife would tell you that I don't know what I'm doing and I need to go make more money.
That's funny.
So
that's funny. Well, hey, I want to talk. I want to talk about a quote I saw from Steven Schwartzman. I believe I pronounced that correctly. I believe he's the CEO of Blackstone, and he came out just the other day and talked about an avalanche of opportunity that's coming because of the threat of higher capital gains taxes. So I thought we should talk about it because I've actually talked about it kind of on my daily financial news, but I want people to appreciate what it is. And then also, assuming capital gains go up, what it means for the next several years. Because I think while it looks good today, I do think there's the other side of the coin starting in 2022. So why don't we talk about what it really means, that what Steven's talking about, an avalanche of opportunity because of the threat of higher capital gains next year?
Yeah, so I think the dynamic here is that the Biden administration has put out a tax plan that calls for pretty dramatically higher capital gains taxes on people making more than $1 million a year, which certainly like your institutional investors and stuff fall into, maybe not small guys, but there's a lot of people who fall into that category who own property. And
that's what I want people to hear. It's a lot more people than you think. This is not $2 million. You could make $50K a year as a teacher, as one person I interviewed, and you want to sell your portfolio that you collected the last 30 years, you will hit that $1 million, especially if you're in California.
Yeah. And I don't know. I mean, I'm assuming that this is going to be graduated, but I don't know, like if it's only the portion over $1 million that's taxed at that higher rate.
God, I would hope so. I haven't read.
Yeah. Otherwise it'd be pretty devastating. But anyway, putting aside also, and you've heard me talk about taxes before. My view on these things is that you've got to kind of look at the politics of it. And I think that this isn't like an opening
negotiation. Yeah.
So the current proposal is for 40% on people making more than $1 million. I just don't see that happening, but I think it's fairly likely that capital gains taxes will go up because this is frankly, it's politically popular across the spectrum, right? Because most people are not subject to capital gains taxes. So they're perfectly happy to see the tax rate go up because it doesn't affect them. So expect them to go up somewhat from where they are. Now, because of that, there are a certain number of people who are kind of like on the bubble of they may be reaching the end of their hold period, and maybe the hold is going to expire next year or the year after that. And that is making them think like, well, maybe in this world of uncertainty about where taxes are going to be, and particularly given the difficulty of pulling off a 1031, and maybe that won't survive either, who knows, we should sell now. What that means is that there's going to be a lot of stuff coming on the market, and that means opportunity for you. Now, the question really is like, will so much stuff come on the market that there'll be a glut and it'll help you get a better price? Who knows? I don't know. If that'll be the case. Yeah. Or if there's just so much money out there that it'll all get absorbed. That's also possible. Then you have to think about, well, then if all these people are worried about capital gains, then if that's such a nightmare, then why would people be buying? Because they're going to have to pay higher capital gains. It's always, it's always like but I think the point is that there is some segment of the market that's going to say, we want to cash out now before we're going to pay more tax if we do it later. So that could lead to more opportunity for you, just in terms of supply of stuff on the market.
Yeah. And again, I think it's just the threat of taxes. It's the people, specifically multifamily investors, apartments. We've had a rough year, right? Collections have been down, the eviction thing, all of those topics. It's been a hard year. And if you had any thought of selling in the next 2 or 3 years, this kind of threat of higher capital gains taxes is like, I'm done. I'm out. And again, I look at my market every day. I'm seeing more 5 to 20 unit buildings available right now than
Mhm.
I've seen in 5 or 6 years. And it's
Huh.
all come on in the last 45 or 60 days. So
I-
it's happening in different places, I think.
How, it's hard to figure out though why that is, right? Is it because people have just like thrown in the towel because of the collections issue, or maybe they're forced to because they they can't make their debt service and they're running out of forbearance, and they don't have any choice other than to sell, or is it because of capital gains, or is it because all of the above?
Yeah,
Because
I certainly think it's all of the above, but right now the price points are kind of what you hinted at, right? The initial price points are full market value. I don't sense distress, at least when I've talked to the listing agents yet. Um, but I suspect a couple of them are going to linger because they're kind of in that gray area between B and C areas. A couple of
yeah,
them are not well maintained. So what I expect to be happening is as we get closer to the end of the year, as the negotiations for capital gains increase happens or doesn't, you're going to see stress. So I don't see stress yet, because even if you sell it now in June or list it in June, you probably easily close by September, October. But I think as we get closer to the end of the year, that time frame is going to really the stress will become obvious, as I think.
yeah. Well, also, like, if you own property and you've had a hard time the last year, if your property is still cash flowing, like if you've managed to cash flow it through all this and you're making your debt service,
Mhm.
but your collections are down and you're frustrated because of that, and you're just like, I just want out of here,
Mhm.
I would not sell now.
Yeah.
And the reason I would say that is because your financial performance, upon which a buyer and a bank are going to evaluate your property, look
Horrible.
horrible, and they look unfairly bad, right, to
Yes.
you.
Yeah.
They
It's kind
look
of the worst time. Yeah.
right. It looks worse than the intrinsic value of the property. So you would be selling at a discount, and unless the property is just causing you so much stress that you can't sleep at night, and for your own, for personal like health reasons, you
Yeah.
just need to be done with it, that's one thing. But
Yes.
if it's just like it's been irritating and you're frustrated, but you're still you're not covering your debt service out of pocket, just
Hold on.
wait,
Yeah.
right?
Yeah.
Hold on, ride this out, because it's going to get better, and you're going to be, even with higher capital gains tax, frankly, you may be better off selling in a year or two, because you're going to get so much better evaluation for the property at full occupancy, normal collections,
Yeah.
than you would now. So don't make that sort of panic, irrational, emotional decision to sell, if you can possibly avoid it. And
Yeah.
and the other thing about taxes too is that beware of. I see a lot of people making bad decisions because of taxes, because they're thinking like, oh, I don't want to pay tax. But the problem is, you only pay tax when you make money. So like paying taxes, not, I mean, nobody likes it, but it's kind of like, don't, if you're in that situation where it's sell, because we have a 5-year hold period, we need to pay our investors back, it's sell this year or sell next year. That's a different situation.
Correct.
But if you're like, oh my God, capital gains are going to go up and I should sell, but you weren't really planning on selling, you don't have to sell. Like, that's a bad decision, because you're gonna, if you hold it, you're gonna continue to make money. If rents do continue to climb, your value is going to rise, and you're going to be better off. The taxes are just like it's a proportion of what you sell of your profit, right? But it's like, the more you want to have more profit. Like I was my friend Ted Lanzaro, who's a CPA. We talked about this in I've interviewed him a number of times, for my students and podcasts and stuff. And Ted just always has this funny thing where it's like, people are saying, ask him like, oh, should I, take this loss to avoid paying taxes, or should I do this thing to avoid paying taxes? And he's always like, it's not a good idea to trade dollars for quarters.
Yeah.
Right?
So not a good
I,
idea.
You know, like you don't want to trade dollars for quarters, and that's what you're doing. People are like so upset about paying the quarter to the government that they're willing to give up 75 cents of profit to themselves.
Yeah.
Right. He said, focus on making the dollar, then worry about the taxes later. Right. But don't, the decision should be based on, is this going to make money or not? And then the taxes are something you deal with later. You can employ different tax, strategies to try to mitigate it, but focus first on making money. That should be your goal, right?
Oh,
Make
yeah.
money first.
Very,
Right?
very well said. Great advice. The other thing I just want to highlight here is, yes, at least in my market, I'm clearly seeing more inventory come in kind of that 5 to 20 segment. But I have a very sneaky suspicion what we will get into once January arrives. And I actually might even be as soon as December. You're going to see inventory kind of pull back, right? Because anybody who was thinking about selling this year or next will sell early. And then there will be just years of long-term hold, because again, you don't generally have to sell multifamily. You can frankly hold it until the next administration and hope that, taxes go down, right? So I think for all of the increase in inventory we see short-term, there will be less inventory kind of next year. Does that make sense?
Yeah, I mean, I could see that. I could see that happening, where if capital gains taxes do increase by a lot, then you might see people holding longer and putting that off longer. I think you may also see stuff like, well, actually, I mean, I'll take that back. That's not true, because that's more of a property tax issue. But yeah, I think it will. I mean, until things hit a new equilibrium, there's always going to be a new equilibrium, right?
Mhm.
So whatever the taxes are, well, the market will adjust to it, and then there'll be some period of like people kind of freaking out, not doing anything, but then the market will go back to where it was. Kind of like in New York when they passed the new rent regulations a couple of years ago, like screaming and yelling by the landlord community. It was the end of the world, and nobody was ever going to like buy a building in New York ever again.
Yeah.
And then and then the market adjusted to the new reality, and just things go on as before.
Yeah.
So that's sort of always what happens. It's only the people who are like caught on the delta, right?
Yeah.
When your expectations are disrupted, that's when it's a problem. But if you buy in the new regime, so
Right.
to speak, then you're everything that goes into the decision that's baked in, and
Yep.
that's kind of how it works. So I think people
I agree.
kind of scream and yell and bellyache about stuff, but there will be a new and different reality. And listen, we've been in this country, we have had 90% top tax rates. We've had very low taxes. It's been all over the place, changing up and down, and property taxes are changing and everything. But when has real estate stopped being a good deal?
Exactly.
During all that time, right? The real estate market has never seized up because of taxes. It's seized up because of interest rates spiking, as a bubble followed by low interest rates causing a bubble, and then high interest rates popping the bubble. Like we've seen that.
Mhm.
We've seen markets like localized situations where the oil and gas market got cremated in the 1980s in Texas and Louisiana, and you had basically like a localized depression in some of those cities, and real estate tanked. You had a housing bubble and then a housing crash in New York City in the 80s. None of this had anything to do with taxes. It had to do with market forces, right?
Yeah.
And so I think whatever happens with taxes, real estate will continue to be a good investment, and the taxes are going to apply to all the other investments as well. So it's not like it's not like someone's coming along and saying, we're just going to whack real estate investors, but we're going to leave those stock investors alone.
Yeah.
Like the relative, it's all going to be the same. And real estate, I think, it will still remain tax advantaged as opposed to other things. So don't freak out too much about this.
Yeah, absolutely. I think we're going to see some short-term decisions where there'll be more inventory this year. I think we'll have a year or so of less inventory. And then you're right, it just normalizes from there. So folks, let me know what's going on in your market, folks. If you're watching this and you're seeing more small multis, again, 5 to 20 units, let me know. I'd love to hear from you. That would be great. And Jonathan, how can people be a part of your world?
Yeah, well, one great way to get more of me, if you can stand that, is to join my Facebook group. It's called the Multifamily Investment Community. We've got over 11,000 members in there talking about multifamily stuff and just trying to have a good time. So try to log in on your computer the first time so you can answer the questions that Facebook won't show you on a phone, but you can always use your phone after that. Mostly just want people to promise not to spam the group and understand what the rules are. That's the basis for it. Also, there's a free giveaway that you can get if you give me your email address. So
very cool.
But please go Multifamily Investment Community.
I highly recommend it. It's one of the few Facebook groups I'm a part of. So do yourself a favor, join the group. Thanks, Jonathan.
Absolutely. Thank you.
Yep.